Well, good afternoon. Good afternoon, and welcome to another Webinar Wednesday, hosted by the Cal State Bakersfield Small Business Development Center, celebrating 35 years in Kern County. Good afternoon, I'm Kelly Bearden. I'm the director of the center and your host today for Webinar Wednesday, number 338. And wow, what a topic. The economy, has it ever been hotter than it is right now? So many different directions it's moving, so many different opportunities, so many different challenges. So we have our economic genius in here today, Dr. Mark Evans, and he'll be talking about the economy, but let's get going first. As I mentioned, our economic specialist, our economic genius, guru, if you're so inclined, is today's special guest, and we'll have a deep dive into the economy and what's going on, and how the economy is being affected, and how small business is being affected by the general economic terms. Yes, you've probably heard me say this before, but that is the one thing it is very difficult for small businesses to control, and such a big part of what goes on in your day-to-day business operations. So we'll bring in our economic guy in just a little bit. We'll also talk a little bit about the 7 disasters in Kern County. Yes, we have 7 active disasters that are being administered by the U.S. Small Business Office of Disaster and Resilience. We'll talk a little bit about that. On the economic corner, I'll throw in my food for thought today. Being a lunchtime program, can you ever never have too much food for thought? And so we'll have that on our economic corner, which even bleeds into our poll question, one of our poll questions today. We'll have some more news and information and resources. We'll get the resources to help your small business thrive. Also, we have our capital quarter, which is going to focus on that very specific SBA disaster loan, the economic injury loan, the terms of that particular loan, and getting assistance if you need to actually apply for that. Your answers to your questions, put those in the Q&A box. We'll go to those after Dr. Evans' presentation, and we'll hit all of those Q&A questions at the very end of the conclusion today. Our resources will be in the chat box. They will be put in by our outstanding webinar producer, Maureen Busher-Dang. And yes, we do have a poll question today, a couple of them actually, and maybe even a bonus poll going later in the presentation. So I have 2 poll questions for you to kick things off. And a lot of the economy has been talking about the trade deficit by the United States with many countries around the world. So let's look at that right now. And so launching the poll, what we're going to look at is after China, Mexico, and Vietnam, the first, second, and third countries with the largest trade surpluses, what country has the 4th largest surplus against the United States? Is it Ireland? Is it Germany? Is it Taiwan? Or is it Japan? So, a little preface on this. We're looking for the 4th largest trade deficit that the U.S. has with this particular country. And is this country Ireland? Is it Germany? Is it Taiwan or Japan? So we do have 38% of you jumping in. Please do jump in for the pop quiz portion of Webinar Wednesday today. And the pop quiz question has to do with the trade deficit for 2024. After China, Mexico, and Vietnam, what is the 4th largest? Is it Ireland, Germany, Taiwan, or Japan? And, I think I would have got this question wrong. And I think more of you might be getting it wrong as well. So do jump in with 62% of you participating. Give you one last second to jump in and get me over 70% participation for this particular poll. In a few moments, we're going to end it and share the results with you. 56% of you say Japan. I'm sorry, that is incorrect. 22% say Taiwan. I'm sorry, that is incorrect. 17% say Germany. I'm sorry, that is incorrect. 6% of you, yes, 6%, almost stumped you with Ireland. Of course, I did stump myself because I didn't have that one when I looked at the story myself. But yes, Ireland is the fourth largest trade deficit country that the United States trades with, almost approaching about over $80 billion a year. And so, it's not all a bunch of green beer we're buying from Ireland. Most of it comes in the form of pharmaceuticals. Large number of pharmaceuticals come that have kind of isolated into Ireland there. Okay, tough poll question number one. Let's move on to the next question and see if that one is maybe just a little bit easier. And it is, because it's just going to ask what your biggest issue is. So a chance for us to do a little market research on Webinar Wednesday and launch the particular question, not only economic based, but what is your biggest issue facing your business or you today? Maybe it's you as a consumer. Is it inflation, or is it workforce issues? Is it government regulation? Is it the cash flow profitability of your business? Is it accessing capital to start or grow your particular business? Or is it the fear of recession? Gee, hadn't talked about the fear of recession until after this last weekend, but it's now going to hit that particular question as well. So again, your biggest issue right now facing you as a business, or potentially maybe you as an individual, who knows? Is it inflation, workforce issues, government regulations? Is it cash flow and profitability? Or is it accessing capital to start or grow your business? Or fear of recession? So pick the single choice. Which one is that? And we do have 46% of you that have already jumped in and looking to get a little bit higher participation. And then we're going to close the particular poll. You can't be wrong on this. I might have stumped you on the first one. You can't be wrong on what is your biggest issue. Inflation, workforce, government regulations, cash flow, accessing capital, or recession. Okay, with 53% of you playing along with me today, we're going to go ahead and end this particular poll and share the results with you. And your biggest concern is accessing capital, followed by a three-way tie. So accessing capital, a quarter of you at 25%. The next biggest issue was actually cash flow, profitability, government regulation, and inflation. So thank you for participating. Moving right along, the U.S. Small Business Disaster and Resilience, as you heard in our a little bit earlier, heard that there are some actual openings right now that are happening in the particular focus of disaster loans. So let's start with this slide. This slide is showing all 7 of the current SBA disasters that are occurring, that have occurred, or are open for Kern County. And you'll mention, it's easy to see, down there, the Park and Burrell fires. And that's the only one that is actually happening right now actively within Kern County. The others are in counties that are contiguous to Kern County, either being Los Angeles or Ventura counties. Almost all of them are fires with the exception of a landslide and road closure. But what is happening is if your business has been impacted to the tune of your cash flow, your sales are impacted by the disaster in the county next door, then you are eligible to apply for SBA economic disaster loans. And so, again, you'll see that there's quite a few different disasters that have occurred since, the middle of last summer, and they're still open for a considerable amount of time. And the reason is because you maybe do not realize that maybe your biggest customer is not buying any materials from you anymore, or is not providing any particular service. For example, the Burrell fire, it could be very easily your economic injury. And again, that's going to be economic based. So hence the theme of the day. So it's going to be affecting your cash flow, your sales and revenue. We do have 7 of these open right now. Going back and looking at these disaster loan limits and some of the opportunities. See, number 2, economic injury. That's the only one that's going to apply for this one. So it is available for small businesses and private nonprofits. Also, so for some working capital loans, the limits do go up to $2 million. So again, it is a loan program where you're going to have to go back in and show that you've had an economic loss and that it is affecting the day-to-day operations of your business. So for that, the economic injury actually covers all 7 of those particular counties or particular incidents, excuse me. So a little bit more on how to apply for those, but let's move on to our capital quarter, which is also on the same theme, and it's asking a question. Potentially you are asking this potential question is, how can the SBDC assist me with the economic injury application? Well, what you're looking at is you're looking at sales that have been impacted. So if you can go back last year and document where your sales have been impacted significantly because you're not able to potentially sell to a former customer, potentially you can't sell to a market, it could be a service, it could be a product, but if your sales have been impacted, generally you can get some great terms on these particular deals, up to 30 years at 4%, and actually help the cash flow of your business to get you through the rough patch in order to survive. Being a 30-year loan, the cash flow would not be dramatically impacted by a shorter term loan, and the SBDC can sit down and work with you and help assist in you in filling out the application and also helping you demonstrate that your business is impacted from a cash flow basis. Okay, so on to other segments of today's. Our usual segments continue with our community calendar, and we like to call it the resource of all good things happening. We had this one, the West Kern Economic Alliance, which is a meeting that is happening today from 2 to 4 in Wasco. And these are community-based meetings where you get some of the local officials and small businesses and resource providers. I plan on being in Wasco at 2 o'clock this afternoon to talk to everybody about how they can access SBDC services and how the SBDC could help them. But there are also local officials. It's a great time to bring up if you're having a particular, I think, a legal issue, particularly zoning. Maybe it's an issue with regulations or some other factor. But today it's going to be in Wasco. These happen every 2 months. One of them in West Kern, and then the other one in East Kern, which will be in East Kern tomorrow at 1:30. Yeah, it'll be interesting to see if people from Bakersfield can get over the Tehachapi Summit with snow forecast tomorrow. But then it's going to be, your communities in Eastern Kern tomorrow that are going to be represented and be available to assist those of you that might be having some issues in those particular communities. Our free human resource hotline that is provided by the California Employers Association at no cost. Great first step and first place to go if you have questions, if you have particular issues. There are the counties listed. Use that local phone number and call if you have a potential human resource issue that can be helped by the California Employers Association. Also, our SBDC tools to assist your business succeed. As you see, we have a rather full toolbox. Might have to be actually getting a larger toolbox with all these resources. One of them that I'll talk about real quick is our YouTube SBDC channel. Our CSUB SBDC YouTube channel now has about 450 subscribers. You can go there and subscribe when we drop the next edition of Webinar Wednesday. You'll find about approaching 300 videos. So most of our Webinar Wednesdays, going back to 2013, are in our YouTube channel. It is usually hitting YouTube by the weekend following today's presentation. So look for it there. You'll find the complete recording, minus the first couple of minutes, I might add. So the first few minutes of my introduction get cut out. So our YouTube channel has a lot of great resources. If you want to rewatch this video, it is the quickest, fastest way to do so. We'll be back next week on National SBDC Day, March the 19th for webinar number 339. And you can contact us to sign up for free, confidential, no obligation, expert consultation with our advising team. You can sign up at our website at csubsbdc.com and get some assistance. Ask the questions that you want to ask, get the feedback, use the soundboard as an opportunity for you to address any particular issues with your small business. And that brings us to today's special guest. Our special guest is Dr. Mark Evans. He is the emeritus professor, economics professor, with over 40 years of service at Cal State Bakersfield. He served as the economic department chair and as the associate dean of the College of Business and Public Administration. He was elected to the CSUB Hall of Fame, the Faculty Hall of Fame in 2023. And of course, his greatest accomplishment has been to be the Webinar Wednesday resident economist. Dr. Evans, thank you for joining us today. It's great to have you on and to talk about the economy at such an important time. Come in and take it away.
Thank you, Kelly. When you're a professor, you can apply for a sabbatical every 7 years. And I've been retired about 7 years, so I asked Kelly if he would give me a little sabbatical. And he was kind enough to do that, but I'm happy to be back. I'm all refreshed. He wants a resident economist to come in every once in a while and tell an economic story. So let's just briefly talk about what are the different kinds of economic stories that economists tell. First of all, they all have a prologue. As you know, all we talk about is numbers. So before we can do that, we have to turn phenomena into numbers in some way. So for example, today we're going to be talking about small business jobs. So we have to look at some data to really talk about that. And the way we're going to define it for today's purposes are a small business job is a job of a person that has unemployment insurance and that works for establishments with less than 50 covered workers. Okay. Once you have data, there's three things economists do with it in ascending order. The first one is just try to look at it, use descriptive statistics to figure out if there's any patterns between the different variables. Second step is where there appear to be patterns. We like to tell stories about whether after churning the numbers, we think the correlation between variables is just spurious or whether it's actual causal. And then the last type of story that I'm really not going to tell today is a story where you're actually putting impact measures on the, if A causes B, what is it quantitatively? For example, we expect Z to decrease by 25,000 if X increases by 10%. I'm not going to give you any impact estimates today. An example would be my colleague Richard Gerhardt, who spoke at the Hispanic Chamber yesterday. And from reading the paper this morning, he provided an estimate that, for example, the tariffs would cost Kern County between 400 million and 900 million or so income dollars. That sort of thing would be an impact story. We're going to mostly tell pattern stories about what is the role of small business in Kern County compared to California at large. And then when we talk a little bit about what's coming up in the future, we're going to have some sort of a causation model to get a handle on that. So what are some small business patterns? Again, I've been on vacation for a while, so I thought I would just take a look at what is the magnitude of the small business sector in Kern County versus California. To do this, I'm looking at data on establishments, jobs, payrolls, compensation by size of establishment. And then we'll look both at some snapshot patterns from the last available data, which unfortunately is late 2023, as well as some patterns of change. So if you get a copy of this presentation, there's an appendix that has a bunch of the data tabulations, but I moved them to the appendix so we could just get through to the main ideas more quickly. But there is data there if you have a copy of the presentation, which I think Maureen could send out. Okay, let's look at the number of small business firms in Kern County and the amount of employment generated by these firms in Kern County, compare it to the statewide average. When I did this, I found, well, first of all, what do I mean by a small business? Definition for purposes of this presentation is less than 50 employees. The SBA defines it as less than 500, but I thought for our purposes and our audience, it would probably make more sense to define it as less than 50. Okay. If you look at total establishments in Kern County, small businesses with less than 50 employees make up 96% of the businesses. That's roughly the same percentages in California. If you look at it from the point of view of jobs, firms with less than 50 employees generate 42% of the total jobs in Kern County. If you look at it at the state level, it's roughly the same, 42%. Although then if you look at the last 3 years, although the number of small business jobs is growing at about the same rate in the county and the state, that's 10% over the last 3 years, the number of firms in that smallest category, 0 to 4 employees, grew about 3 times more rapidly in Kern County than for the state average. So our very small firms, less, 4 or less employees, grew 20% over a 3-year period versus 7% for the state as a whole. This bar graph shows employment shares of small business in different industries. For example, the blue bar all the way over on the left is food and drinking places. Establishments with less than 50 employees, small businesses generate 70% of the jobs in that industry, et cetera. As you go from left to right, what it's doing is on the left, it's really it's taking the size of the industry into consideration. So that's sort of an indicator of just not the percentage of jobs, but the total jobs being generated by small business. So food and drinking places would be the most, and then you go there. But again, it's 42% on average and much greater than 42% in quite a few industries. If you look at the payroll data, and then you combine the payroll data with the employment data to figure out average compensation, here's the takeaway after you've pulled down the data, looked at a bunch of ratios, and tried to figure out what's going on. Okay, in terms of the latest year, Kern small businesses generate a larger share of Kern total payroll than the state average. So here in Kern County, small businesses with less than 50 employees generated 40% of the total payroll of the county. Whereas those small businesses all across the entire state generated just 30% of the total payroll for the state. And this is mostly because if you look at the firms with 10 or more employees, they generated a greater share of payroll in the county than in the state, even though they represented the same number of employees, pretty much, or the same percentage of employees. Now, in terms of growth, once again, our payroll growth in I guess, the larger categories of small, let's say 10 to 19 employees, generated about a 28% increase in payroll over the last 3 years versus 20% for the state. So this business size of 10 to 19 and then 20 to 49 seems especially dynamic in Kern County in terms of its contribution to the economy. Okay, the second snapshot. If you look at average compensation for the state as a whole, you see a big difference between the average in these small businesses, 61K, versus the state average for all businesses combined, average compensation 83. The thing that was interesting that I noticed is that if you look at just Kern County, there's considerable payroll compression, where if you work for a small business with less than 50 employees, your average compensation's around 50K, but for the county as a whole, it's around 52K. So here, small businesses can compete with the larger businesses, whereas in the state and also the nation as a whole, it's a significant problem of employee retention from losing people for either because of benefits or salary to larger companies. If you look at the trend over the last 3 years, our small business sector grew 14% in terms of average pay versus just 8%, 8.5% the state. And again, this was because of that dynamic category, apparently, of firms that are, once you get to the critical mass of 10 employees, businesses do very well compared to the state average here in Kern County. Okay, so I wanted to start by kind of looking at that just to get my bearings in terms of what small business means to the county. And as you can see, it means quite a bit. Let's look at some local conditions here, some polls that have come out recently. Goldman Sachs has a program called, I forget exactly what it's called, something like Voices of 10,000 Small Businesses or something like that. And this is 10,000 small businesses that they affiliate with. And then through Babson College, they do a quarterly survey of small businesses. And one just came out in February. And some of the findings, 78% of the surveyed businesses plan to grow this year. 46 plan to create additional jobs. 89% are having trouble finding qualified workers. And again, you get this huge discrepancy between small business pay and larger organizations just about everywhere but Kern County. 62% of these cite large firm competition for labor, both pay and benefits. And then in terms of capital, 35% have requested a loan in the last several months. 80% are having difficulty finding affordable capital, just like in the poll that you responded to a few minutes ago. One of the interesting findings, artificial intelligence, there were some questions. 80% of those that indicated that they have started dabbling in AI said they see that it could really increase their productivity. 44% indicated that they really lack the expertise to use it. And 76% indicated that they would support a government program that helps small businesses adopt artificial intelligence. A lot of good things, reducing inflation expanding healthcare, retirement, and paid leave benefits so they could better compete with the larger corporations, and then reforming and simplifying taxes. Okay, so we can look every quarter or so for a new survey from this group that'll provide lots of interesting information. The National Federation of Independent Businesses comes out with a monthly survey that's quite large, so we can look to this one for monthly indicators at the national level. Here's a few here. I don't think I can really go through them all in the time we have. There was a small dip in the optimism index compared to 3 months ago. Their uncertainty index hit 104. And I just read this morning somewhere on a newspaper article based on this survey that this uncertainty index, their reading of 104 ended up being the second highest reading of the uncertainty index since the index came into existence in 1976 or something like that. So uncertainty is quite high. The number 104 doesn't suggest it really compared to how most indexes are constructed. But according to the way this particular index is constructed, I guess it indicates a really high level of uncertainty. Earnings and sale, you see a negative number. The way that's calculated is the percent of respondents indicating that earnings went up or sales went up, minus the percentage that reported they went down in the last 3 months prior to the prior or versus the prior 3 months. So what you see here is that there are more firms reporting that earnings and sales decreased than that they increased. So for example, there were 24% more firms indicating that their earnings decreased in the last 3 months relative to the previous 3 months than that indicated they increased. Price changes, there was a net increase of 32%, or 32, meaning that there's 32% more firms indicated they raised prices than indicated they lowered prices. The employee number, you can see that it's slightly negative, which again suggests this difficulty that small businesses are having nationally in retaining employees because of higher pay and benefits offered by larger corporations. Lots of pay increases, compensation plus 33, that's a big number. 24% report borrowing money in the last 3 months, or at least every 3 months, I guess working capital, and then capital expenditures, about 58% reported a capital expenditure over the last 6 months. The NFIB also conducts a different survey every 4 years, and this was conducted in first half of 2024 versus the first half of 2020. And what it asks small businesses to do is to rank their problems from 1 to 75. They list 75 types of problems small businesses are having. And look at the difference here. Unreasonable regulations, that was the top ranked problem in California. It was ranked 12th in Texas, 7th nationally. State taxes on business income was ranked as the 3rd most significant problem in California by small businesses, but it was only ranked 39th in Texas. State and local paperwork rated the 10th worst problem in California, 28th in Texas, where Texas, their big problem is property taxes as opposed to income taxes. So this was kind of interesting, I thought, since we're losing a lot of businesses to Texas. There were also areas that became increasingly more important as problems in 2024. versus 2020. And chart on the left shows that the things that are really ranked much more highly in terms of being problems in 2024 versus 4 years ago. The chart on the right shows the things that were kind of less of a problem relative to other things. Note that number one in terms of a worsening problem compared to 4 years ago is interest rates. 4 years ago, it was ranked 56 out of 75 problems. Now it's ranked 13th out of 75 problems. Undocumented workers, there's a little bit of an increase in its importance, but again, this poll was taken in the first half of 2024. If it was taken now, it would probably be a much larger concern. Anyway, it's more than I can go through, but these slides, I will make them available. Okay, let's look ahead a little bit. And here I would like Kelly to really ask you the following poll questions. So I'm going to turn my screen over to him. But we're often asked to make presentations on the economy at meetings and different events, and many of you subscribe to publications that have this sort of information. So what I'm trying to get at in this poll is how you actually use the information. So Kelly, I'm going to turn this over to you
Mark, you
for.
can do it right there. I'm going to launch the poll right there, right now. And there you go.
Okay. Oh, okay.
A
I
little
didn't know you could overwrite me there.
but it's kind of like why or how do you consume this information? And you can answer this as many times as you want. You find it interesting and might be valuable for future decision. It's psychological, it lessens uncertainty, anxiety, and I come away optimistic. I use this info to inform and use as a point of discussion within my network. Or do you actually use this information better or worse due to general economic conditions, make specific decisions, get an idea of where the economy is coming so you're not blindsided? And if you have something else to add, put it in the chat. So, Doctor, we have 45% of the individuals now reporting. What we're going to do is jump in and give people a couple more moments. Just how do you use this economic information? A marketing poll, I believe, by the good doctor to know where to guide himself in the future.
Right. And the one I didn't put on here that's probably most significant is usually when you go to one of these meetings where an economist is speaking, you get a free lunch, but I didn't put that one down.
You get about everything on Webinar Wednesday but the free lunch. Although it has happened before. 330, there's been some free lunches.
Yeah, and while you're answering this, I'm really interested in learning how you the areas where you directly use information that you get from a publication or a forecast or a presentation, where it's directly tied to a specific decision you've made. So if you've in the past read some economic information, then directly then used it to make a decision of some sort, if you would email me with that example, that would really be great. But what type of decision you made, and then what type of information or forecast you directly used that led you to that decision.
And we have two winners in our poll, Doctor, of how you consume the current economic information. And it's interesting and might be valuable in a future decision. And also, I get an idea of where the economy is headed, so I'm not blindsided. So thank you, everybody, for participating. I am going to stop sharing now. We have one in other, so we have some in other. And stop sharing and take it away.
Great. Well, thanks, everyone. I think I would have guessed that those were the two most important reasons. So hopefully that means I have some knowledge of the audience I'm talking to. Okay, so looking forward, here's two kind of interesting quotes. The first one I think is reflected in the poll we just did. Forecasting our futures is built into our psyches because we will soon have to manage that future. But then we also have the quote by John Kenneth Galbraith here, who is not a forecaster. The only function of economic forecasting is to make astrology look good. So yeah, we do have a lot of trouble accurately forecasting the future. Why is it so difficult? I think a couple reasons. One is that there's millions of people that are independent actors making millions of decisions. And the way a forecasting model works is, for example, it would be turning all of those individual decisions by single consumers into one formula that's supposed to represent the total purchases of all the total consumers. And there is no mathematical function that can consistently aggregate those individual decisions. They're all going to be kind of sloppy approximations. Second problem is there is no model in the world that can explain everything. So every model is going to have some variables that are taken in from outside the model, independent variables, and then that influence what's trying to be explained inside the model. But the model itself can't purport to really know anything about what's happening to those independent variables, although they greatly influence what's inside. And then, so what most models do is for those independent variables not trying to be explained, they just use some trend value of them to forecast what's going to happen internally. So you very seldom get a forecast that something radical is going to happen. And then finally, there are these black swan and gray swan events where things that nobody ever would have anticipated, or maybe somebody could have anticipated, but they wouldn't have put their money on it. And this can drive the independent variables totally off their trend line, or it can actually destroy the historical relationship between the variables within the model. So here we have the latest survey of professional forecasters. This is put out by the Philadelphia Federal Reserve Bank. They survey the people that are in the professional business of making forecasts, and then they publish the mean or the medians for each variable. Then they also provide a bunch of distribution data on like standard deviations and variances of forecasts, highs, lows, that sort of thing. But what you see here is what typically happens in a forecast. You don't see the world falling apart here. You never do in a forecast like this, because again, nobody knows what's going to happen to the outside variables, and they just assume they're operating along a trend line. But you can see that when this forecast was taken, which was earlier in the first quarter, GDP growth next year estimated to be about 2.5%. It was 2.8 in 2024. The interesting one, I only added this one this morning because of everything happening. The risk of a negative quarter, when this survey was taken, it went from about 10% in the first quarter to 23% in the fourth quarter. But Moody's Analytics, I believe it was just within the last day or two, increased their risk of a downturn this year from 15 to 35%. And I think it was yesterday that Goldman Sachs jumped their estimate from 20 to 25%. So the one thing that sticks out here is if you look at the 3-month Treasury bill, they are projecting that it'll not much decline this year, but then a little bit, and then a little bit more decline in 2026, which basically would reflect an assumption of tame inflation. Okay, let's talk about these black swans. We're in a period of really high uncertainty, but let's look at if we had made a 10-year forecast in 1910, 1920, 1930, et cetera, what we would have missed. So this explains just the impossibility of really making forecast over more than a year or two. And even a year or two will only hit it if those baseline things outside the system are relatively stable. 1910, we would have missed World War II. We would have missed the Russian Revolution. 1920, we would have missed the entire stock market collapse and onset of the Depression. 1930, we would have missed the beginning of World War II. And this goes on and on. 1990, we would have missed the collapse of the Soviet Union. We would have missed the World Wide Web launching into the public domain, which had huge consequences, of course. 2000, we would have missed the Great Recession of 2008. We would have missed the beginning of the drought here in the Western states. So yeah, there are things that could happen. There are things that are going to happen that we're not anticipating at all. And right now, everybody kind of feels like there's more uncertainty than in a long time. This is an uncertainty index that's available online at policyuncertainty.com, put together by 3 really good economists. The index on the left shows a spike upward, and then they calculate sub-indexes based on a specific area of government policy, measuring the uncertainty there. And what you see is relative to 3 years ago, uncertainty about monetary policies, their index went up 43%. But look at some of these other areas, fiscal policy, taxing spending issues. The index has gone up 200%, which basically means it tripled over 3 years ago. Healthcare, the index is 200% higher, which represents a tripling. Entitlement policy, huge increases in uncertainty. Let's look at trade policy. The index just went crazy. It's now almost 2,700% higher than it was 3 years ago. So this is definitely a difficult time to try to figure out what's going on. Let's do this. Okay, so anticipating what could happen to the local economy, let's look at a regional income model, which basically says there's going to be money flowing into the county, either because we're selling goods to outsiders like food, oil. There's going to be non-labor income coming in from international capital markets, interest and dividends. And there's going to be inflows of transfer payments, which is basically federal policies such as retirement, healthcare, the safety net. And then you have the non-basic sector. These are jobs just selling goods and services to local people. And then total income is the basic inflows times a multiplier. So if we want to ask what's going to happen to the economy, we have to look at these 3 major types of inflows. Okay, the basic sectors, we got big potential conflicts now between Sacramento and Washington, D.C. Examples, drill, baby, drill, green energy policy. D.C. is also getting involved now in California water. We have tariffs, food exports, labor supply, and immigration. Huge plans in terms of military R&D that could make a big difference on the east side of the county. In terms of those capital inflows, we're totally uncertain about interest rates, stock market, dividends. And then this is a double-edged sword here because interest rates, stock prices also influence capital investment. Now, this third area is what I want to focus on. So this is some data that's trying to break down these 3 inflows into 3 major areas. Inflows from selling goods and services, from dividends and interest payments coming in from outside, and personal transfers such as retirement, medical, et cetera. And using the last income data available with this level of breakout in 2020, what we find is that Actually, about 20% of the inflows are from capital markets and about 37% are from federal transfer payments. So all of the policies being considered, the effect goes beyond the basic industries because, for example, 37% of our inflows are dealing with things like retirement, disability, medical benefits, income maintenance programs, and things like VA, education and training, nonprofit taxes. So in terms of the regional economy, just the areas that could impact that go much beyond agriculture and oil and the basic industries to also include these things going on in the stock market as well as the federal budget, which is being, we don't know what's going to happen there. In terms of the last category, this is from the B3 case study several years ago. Many families, roughly half of Kern County's families are struggling and dependent on a lot of these federal programs. So with that, I'll pass the baton back.
Okay, Doctor, fantastic stuff. Looking at a lot of that data, it's generating some questions. We do have a few minutes for some questions. So if you have a question, please go to the Q&A box and insert it. And we do have some in there now, so I will start asking. So let's see, Doctor. Let's start with a question that, are we headed toward a recession? And if so, how should I prepare for it?
I think there's increased risk. I think the risk, I think the biggest area or definitely a big area is the tariff issue. But if tariffs could actually increase the size of our manufacturing sector, it takes long run investments, that you really wouldn't see anything for a decade or so. And then and on top of that, you really wouldn't see major increases in local capacity unless people expected the tariff policies to continue basically forever. And I mean, they're not even continuing for a day or two. They're just flipping so much that I think that's the source of the uncertainty. I think what you should do is just increase your level of liquidity, try to work down your debt, and just postpone anything that's a major commitment, long term, like hiring another employee. Or, I mean, I hate to say that, but if there is the risk, then you don't want to really make any major investments until you can see a little bit more clearly what's ahead.
Okay, good stuff. Okay, next question. It was fascinating. I found about the small business wage being substantially higher, or at least closer to the average wage of the county. So is that growth trend sustainable for small business?
I think the average compensation compression is definitely sustainable, which means that what's sustainable is you shouldn't have as much of a problem attracting workers as your compatriots in other regions. But in terms of the growth, the nice growth that we've seen locally, I think the problem is you'd have to do some causal analysis of what's causing it. Is it spurious, or is it something? Are there some fundamentals underneath that are really driving it? And I'm not in a position to say because I haven't seen any studies of what could be the cause, and is it statistically significant or not? So I don't know. I think all we can do at this point is to keep monitoring it, for a couple more years, and if it persists, there's something going on there that's good. But I think it does suggest that business, if you can get it up to that, from the 0 to 4 stage to to the point where it's growing and you have 5, 6, 7, 10 employees, you probably reduce a lot of your risk at that point, and you can definitely generate some momentum.
Well, it's definitely a fascinating stat, particularly compared to statewide other counties throughout the state. Okay, got one last question. Is now a good time to expand my business, or should I wait?
I think it depends a lot on just how strong the evidence is that would, in your individual case, that would support an expansion, how big of an investment it is. If it's a marginal decision, I would probably wait a little. But if the numbers are overriding, when you do your benefit cost analysis, then I think maybe you go for it. But
We don't
I
have
would
that.
I would say you have to look at the specifics and how, if it's an extremely easy decision to make, or it was a couple months ago, then it probably still points in that direction. But if it was on the bubble recently, I think you take it off and wait.
Yeah, and I think you hit the nail on the head, being an individual decision for each business based on a lot of factors going on in those businesses, with the general economic conditions just being one of those. Okay, pop quiz time, Doctor. What is the average percentage in taxes that small businesses pay in Kern County? Stump the doctor.
Do you mean income tax or
Well, I would assume it includes all taxes.
all taxes?
Income, maybe a portion of their payroll tax, real estate taxes. Let's just make this as hard as possible for you.
Okay, I'm gonna say, this is just a wild guess. 40%.
Okay, and if anybody knows the answer, please email us. And if not, we'll call that our final question of the day. So
Yeah, but if you don't know the answer, it would be much better to ask an accountant than me.
well, you know what? If we don't know the answer, then your answer must be right. So going through our chat very quickly as we wind things down on webinar Wednesday number 338. You see a lot of different resources in there, and related to a lot of different things. So, Doctor, let's wrap it up. Any last thoughts?
No, I think we're just at a period where I think a lot's going to play out over the next month. So we'll see. Over the next month, I think we'll know what's going to happen in terms of the Senate, in terms of the budget that was forwarded to them by the House. I think we'll probably have a better feel of to what extent, the tariff policy is a day by day tit for tat, or if there's some stability there. I think it will be interesting. Trump is talking about kind of like a national defense shield over the whole country, such as Israel has. That would imply a huge R&D budget that could have some implications on the east side of the county. I don't know. I just think hopefully in a month or so, at least some of these questions start getting answered.
Wait and see, says the
We're in a
doctor.
wait and see mode.
The doctor says wait and see. So, well, we're out of time. My green background says, hang in there, Ireland, and have fun on Monday on St. Patrick's Day. And for Dr. Mark Evans, I'm Kelly Bearden. We'll be back next week with Webinar Wednesday 339. Goodbye, everybody. Have a great week.